Good morning, investors and traders. As always, in today's segment, we will be looking at opportunities in the stock market and in forex market as well. In addition to that, I will also discuss commodities such as gold and oil, and if there is an opportunity to go long or short in the crypto market. And when we refer to crypto market, we are talking about the biggest coin in the crypto market, which is Bitcoin. Now, my name is Naeem Aslam. I come with a wealth of over 15 years of trading experience. During this time, I have worked as a hedge fund trader with Bank of New York Mellon and as an equity trader with Bank of America. Currently, I work as a chief market analyst for Evertrade. Now, let's go back and focus on the markets. First of all, what we have is a little bit of a distraction within the equity market. Now, let me define what do I mean by that. So basically, what we're seeing is that the US futures moving to the upside, but the European futures are moving to the downside. So clearly, there's a disconnect between the two. And whenever that disconnect happens, usually it is the US futures which are really likely to push the markets higher or drag them out of their misery. And even now, I'm seeing some sort of a signs of where the European markets are getting off their lows. But the reason that why markets are trading to the downside is because of the restrictive measures which governments around the globe are putting in place ahead of the holiday season, and for the right reason, because no one wants the situation to get worse. No one wants to just become overly enthusiastic about the coronavirus vaccine, which is going to recover, which is going to put us on a recovery path. But higher coronavirus cases also means lower economic activity, which comes due to the restrictive measures. Now, in terms of an opportunity within the S&P 500 index, the S&P 500 futures have recorded 5 consecutive days of losses. Now, we haven't seen anything like that since October this year. Now, when that particular sell-off happened back in October, following that, we've seen this massive rally or the move to the upside, because after 5 days of consecutive losses, the S&P back in October sharply moved to the upside. Just by the way, FYI, if you have any questions, please feel free to post them right here, and I'll be more than happy to answer them as we go along. So now the traders and investors are still very much thinking, okay, look, the prices are moving lower, and then perhaps we could see another upward move for the S&P 500 index, which pretty much can happen. But one important difference between now and at the time was that at that time back in October, prices were continuously selling off. We were seeing some serious sell-off. But right now, we are not seeing that. Market falls, touches the low of the day, and then quickly moves back up to the upside. But the next day, the market again makes a lower low and a lower high, and that maintains this downward trend for the market. And because of that, we are consistently seeing this move to the downside. But on the daily time frame, what I want you guys to focus on is to look at the area in around the 50-day simple moving average, because that is the area where we could see the markets propping back to the upside. But overall, I think we have to make sure that we are filtering out the noise, and that is the surgence in coronavirus cases now, and of course the government's putting restrictive measures primarily because of a holiday reason, not because anything else. Anything else is really primarily an excuse what the governments are really using in order to put the restrictive measures. But the main reason is no one wants to have the holiday season messing up the entire situation for the economy. Now, going into the next year, into perhaps towards the mid-January or towards the end of January, we should see the equity market starting rallying once again. And remember the famous saying, however the performance of the market during the month of January is very much replicated for the rest of the year. So if the January is positive, it is likely for the rest of the year is mostly likely to be positive as well. There is some evidence which backs this theory as well, but obviously this year was particularly very different. Although if I remember correctly, we had a negative close for a month of January anyways. So in terms of a gold, Gold prices are still trading above the 1835 price level, which is quite good, because we don't want the prices to move below the 1800 price level, because if they move below the 1800 price level, that means that there could be more weakness in terms of the prices. But for gold prices, the biggest event is the FOMC forward guidance, and how the markets are really going to take that, and how the Fed is really going to scale back from them. And finally, in the crypto space, Bitcoin did touch another once again the 19,500 price level yesterday, and the hope is still that the prices will make new all-time high, and the journey will continue towards the 2,000 price level, because only after that we can certainly say that yes, this upward momentum will very much continue. But for now, let's keep an eye on these ones, and then happy trading, and I will see you guys tomorrow.